Alright, this is the trading plan week ending 21st of August 2015. On Monday, as you can see, there's bugger all. Retail sales, that's one of my favourite things to trade, but only on ones that are large enough to trade. Unfortunately, the Swissy is not large enough. If you go back and look at the history of it, it doesn't actually do too much. Now, there's not that much on this week again, but the ones that are on are quite good to trade. So the first one off the bat is the sterling CPI. I'll FNG it on deviation. See if you can get a bit from it, because the CPI should move it a little bit. If all of these are in the same direction, then you might be able to stay in for a little bit longer. But remember, the sterling is a strong currency, so if you get all in positive, and you're in there against, a weaker currency like the Canadian dollar, with oil prices going down even more lately, the Canadian dollar is under a lot of pressure, so I would be looking at selling the Canadian dollar a fair bit this week, and I would be looking at buying the sterling. Not just off this data, but if you look on Thursday, which we'll get to, all of these are quite positive. So you would be thinking into this, you should be strengthening. So a weak core CPI, you can actually, it's possible to sell the US dollar and buy the sterling into these. Or if any news drop comes out, from monetary policy from Japan that's weaker than normal, that would also be a good trade, to trade positive sterling, weakening yen into there, which, you don't know what that's going to come out as. But anyway, CPI, FNG deviation, Amaze, I'm going for a 60 pip gap. Medium lot size, just 10 pip take, 15 pip stop loss. I've found a swain of 30 over the 45 is a little bit better, so keep your swain at probably 30. And then, yeah, I'd be trading, as I said, with a weakening Canadian dollar, weakening New Zealand dollar. The US should be strengthening still, but with the Chinese sort of news coming out, it's a bit choppy. It's quite volatile. It's hard to read what the US dollar is actually going to be doing. They are going to increase rates, but because they're going to increase rates, it is making it choppy. Like, basically, if they say, no, we're definitely not increasing rates in September, then all of a sudden that weakens the US dollar for a little bit, but eventually it strengthens again, hence the volatility that you were getting with it. So the Chinese data comes out, they go, well, that's affecting the world economy. It's now slightly less likely that they're going to be doing their interest rates in September, and it could even push it back to early 2016. So that is a weakening sign for the US, so that will start selling off. But once that's all settled down, that starts strengthening again, and you go through the whole cycle again of when are they going to raise the rates, start strengthening, no, they're not going to raise it then, weakens, and again. So right now it looks like we're into the slightly more weakening side of the US dollar just because of the Chinese news, so keep your ears to the news feeds on what's happening in China, just because it's the second biggest kind of economy in the world, it does play a part on when the US might be doing their interest rates. So that's CPI. Building permits, I'll also trade. I'll do the FNG on deviation. I'll Amaze only on positive data, 70 gap, medium lot, 10 pip take, 15 pip stop loss. Just purely because it's not a big news story. If you get some positive data, you'd probably be more likely to get your 10 pips, where if you had negative data, you're probably not going to get that much more. Although you could do negative data if this CPI figure here is quite a nice positive sort of reading. You can trade maybe negative on this against the sterling, but I would be looking again Canadian dollar, things like that, with a nice strong US dollar. Now, core CPI, on Wednesday is the next one. On FNG, only a small take on if it's a negative reading. So, and then on Amaze, I'll do 60 gap, medium lot size, 15 take on positive, and a 10 take on negative. And obviously you've got to pair your currencies right. So the yen has a bit of stuff coming out this week. Nothing massive high impact, but just a lot of stuff. So keep an eye on what the yen's doing. I would be looking at this monetary policy statement just to see a bit more sign of weakness on the yen, and then all your strong currencies, your US and your sterling, are good trades against the yen. It puts the yen back into that basket of the Canadian dollar, the New Zealand dollar, and the Aussie dollar for a while there, but we're not sure with the Chinese situation. Some of the statements coming out from the RBA for Australia are making it a bit of a more of a medium one. It's not bearish, it's not bullish. It seems to be teetering in the middle there. Even though the Chinese data, I mean, long term, the Aussie is weakening, but mid-term, short term, it's choppy because of China. So that's the core CPI. Just the FNG on that deviation there, really. Maybe not the currency pairs that they're pairing it with. Obviously use what's going on in the industry with what you should pair it against. Now Thursday we've got the retail sales. I love trading retail sales. There is a fair bit of stuff coming out, yearly, monthly. All this is positive forecast. So, you know, if you've got some trades, trade into a nice strong sterling into it. That's where I'll be trading. The only trade this week that I'd really be looking at trading into is maybe listening to what's going on in the monetary policy and doing the sterling yen. Now it moves a lot, so you just got to be careful. Have your stop loss a little bit further away. Have your lot size a little bit lower because on how much it moves. Then we go into wholesale sales. It's not really worth trading. Unemployment claims, not really worth trading. The only time that you trade it is if you're listening or looking at a news feed and you see like a figure that comes out saying it is the lowest unemployment claims in 4 decades, then that is going to move it. But general terms, unemployment claims, because it comes out weekly, doesn't move. Now existing home sales, it's a good one. Doesn't move it huge, but it is worth trading on a nice size deviation. So do a medium take, trade for the positive you're looking for, but you can trade negative if all this is positive. Philly, that's not worth really trading, doesn't move it enough, unpredictable. Now this guy here, the PMI, it's worth keeping an eye on. I'm not going to trade it. I'm kind of taking the Chinese and Australia. I mean, there's not much coming out of Australia this week, but I'm also taking China off the cards. Just too choppy, too much stuff going on. Let it settle for a while. There's a lot more other trades, well, opportunities on currencies. You can trade the PMIs if you want. There's a German PMI. If you look here, there's the German PMI. So the German flash and French flash. The German one, because it's the stronger currency in the euro, it's the strongest currency in the euro, that would move the market a little bit more. It's not on here for some reason. Yeah, not sure why. But the French one I've seen doesn't move it as much. The German one, it would be, just a small take. If there's no other news going around, you could do a 60 or 70 gap. Small take, 10 pip. Now, this is the interesting one. The core CPI and retail sales, both big in their own right. Don't normally come out at the same time, but this time they are, which kind of two trading options that are now just in the one makes it very choppy if they're in the wrong direction. So the only real way to trade this is to wait for the news to come out and jump on a manual trade if they're all in the same direction. But be quick. You want to be refreshing your news feed just to make sure you get it as soon as you can. Be watching the charts. Be careful of a big spike in one direction and then it comes back and goes the other way. you just don't know. Like, they're both strong in their own right, but a bigger deviation in one would probably outweigh, you know, if the retail sales is positive by 0.7, but the core CPI is negative 0.1, then it'll probably be negative for the currency. So it's a bit of a tricky one to read. Like I said, trade it if they're all in the same direction. That's really it for the week. Not too many, but remember, the idea is just the fewer trades, and you can make them all profitable. Then you start increasing your lot size as you go, and then you start each trade you feel a bit more confident with, and you start making your pips. It's not necessarily pips, it's your profit, because you know, your 10 pips at a larger lot size is the exact same as, you know, 100 pips on a small lot size. So with scalping and swing trading into a news event, trading the news event, and trading out of a news event, different lot sizes and different opportunities. This one here, if you can, this will be a small lot size, but you'd be in it for a little bit longer. Some nice negative, trade into the positive. That would be the only one this week that you could trade into, where you want to let it run for a little bit longer, and take advantage of the opportunity for nicely forecast in here. It also will come down to what the CPI comes out as well, and if that's really horrible, then, you know, the nice forecast here might not matter. But if this comes out as it is, or even positive, it's just going to lead even more positive into here. So good luck, happy pip hunting.